Hey guys, welcome. I am back. I am back. And as technology would have it, the technology gremlins got me as usual. So I just want to welcome you back to today's presentation. Hopefully, you'll be able to see me and to join me for the information I'm going to share with you guys today. And like I said before, I always like to honor your time. So I am going to just jump right in and get started. Okay, guys. So I apologize for technical difficulties earlier. And so, hey, let's go ahead and get started. So today, guys, I want to talk to you about how to maximize your refund. How to maximize your refund. Um, How many people would like to have a bigger tax refund? Raise your hand. How many people out there would like to have a bigger tax refund? I don't know about you, but I know I want the maximum amount of refund that I can possibly get. But I'm going to share some things with you a little bit later that's going to contradict what I actually just said, and I'm going to share with you why. So you definitely want to stay tuned for that. So if you want a bigger refund, if you want to be able to have the lowest tax bill possible, you are in the right place. By the way, guys, I'll be coming to you each and every Sunday during this tax season, okay? And I can tell you today I'm talking about how to maximize your refund. Next week, I'll be talking about turning your refund into wealth. I'll be talking about how to actually do that on next week, next Sunday. And then the Sunday following, I'll be talking about from tax preparation to tax planning, why you must make the shift. And I'll be talking to you about the importance of making the shift and how and why you actually want to do that. And then on March 10th, I'll be sharing with you how to build tax-free income and how to build tax-free retirement nest egg that never runs out. So, guys, you want to stay tuned and you want to be here with me each and every Sunday as I share this information with you. So, if this is your first time joining me, you may be wondering, who is this guy? Why should I listen to him? My name is Alex Jones. I am the principal of Park Rose Financial LLC. I am a licensed insurance advisor and financial planner. And before now, I actually am a retired business owner of 23 years. I was able to retire back in 2018. This is me retiring from the beauty industry in 2018. I'm an Amazon number one best-selling author. And prior to that, I actually used to work with a Fortune 100 company as a corporate auditor. Okay. So now I actually help individuals and families build the financial resources they truly need so they can have the impact, the life, and the legacy they truly want to have. And that's my purpose and that's my goal, guys, because I understand just how difficult it can be in order for you to be able to build wealth for yourself and for your family, for you to be able to have the financial resources that you truly need and want to have in life so you can have the impact, so you can live the way that you want to live, so you can have a better and provide a better future and a leg up for your family. And that's what this is all about, guys. And the reason why I do what I do is because this doesn't have to be as difficult as it is. And that's the reason why I want to share as much information as I possibly can to help as many people as possible be able to have the resources and the time to have the impact in the life that they truly want. So today, guys, I'm going to share with you four strategies to help you maximize your tax refund. So why is maximizing your refund critical? In my estimation, in my opinion, tax time is probably The one time of year that most people are going to have the biggest lump sum of money that comes to them at any one time, right? Those tax refunds, when they hit those accounts, that's an opportunity for you to be able to change the trajectory of your family. That's the opportunity for you to be able to shift and take your family and take yourself to another level. And so what happens is, in my estimation, this becomes the first real opportunity of the year for individuals and for families to actually have the monies that they need in order to be able to do the things they truly want to do in life to help them get to the next level. And so I share this information because I know that this is the one lump sum. Some people say, "Hey, you know what? I'm waiting. I'm waiting to get my hands on some money, right? I'm waiting until I get a lump sum to start doing some things." This is the perfect time of year, and that's the reason why maximizing your tax refund is so critical and so important. Other reason, this is just a personal reason, but once I retired from the beauty industry for the first time, it actually gave me the ability to be able to spend time with my mother, to be able to care for her. So during COVID, some of you may know who know my story, know that my sister and I are caregivers for my mother. And if I did not have the financial resources, if I did not have the financial means, if I wasn't in a position and a place to be able to care for her, it would be something that I would really, really regret for the rest of my life. And so money is important. There's no doubt about it, guys. And so I just want to make sure, and I want to be able to help as many people as possible live the life and be able to do the things they truly want to be able to do. And live in a way that money is not an object. Okay. So for this year, the IRS has already said so far this year, tax refunds are down roughly 29%. The amount of refunds, okay, the dollar amount of refunds on average have been down about 29%. So, a lot of people might say, man, if government's always on our backs and the rich just continue to get richer. I don't like that statement, okay? That statement may be partially true, but I don't like that statement. The reason why is because it says that if you are not rich, that you can't get richer. And I don't believe that. I believe that people who have a plan and those who take action just keep on getting richer. So if we were looking at it, if you weren't rich, you would look at it and say, well, I don't have an opportunity to get richer because I'm not rich. And I'm saying that you don't have to be rich. You just simply have to be someone who's determined, who has a plan, and somebody who takes action. And if you are that person, you can get richer and keep on getting richer. And so I want to start with taxes because taxes is the biggest stealer of wealth for most of us. We're talking about federal income taxes. We're talking about state income taxes. We're talking about state property taxes and all the sales taxes that we pay through consumption when we buy items. All of these things together, guys, means on average, the average person is going to pay over $500,000. We talk about over $500,000 when it comes to taxes, when it comes to state taxes, federal taxes, sales taxes. We're talking about over $500,000. And if you look over to the left, if you live in New Jersey or DC, you're going to be paying over $1 million over your lifetime in taxes. So guys, taxes is perhaps, in my estimation, it is the biggest wealth stealer. So we have to be able to deal with this. And let me share with you because there is a way. Strategy number one. The first strategy I want to share with you guys today is I want to share with you that you can actually contribute to tax deductible accounts all the way up until April 15th, all the way up until tax filing date. Okay. So if you didn't contribute to tax deductible accounts in 2023, I'm going to share with you there are actually three accounts that you can still contribute to all the way up until April 15th, right? Tax filing date. You can contribute to these three accounts. Number one, you can contribute to HSA account. You can contribute to an IRA account, and you can contribute to a SEP IRA account. So what are these about? The first one, the HSA, is the health savings account. Okay. And you can put as much as $4,850 into a health savings account. That's if you're over the age of 50, you can put up to $4,850. If you're under the age of 50, you can contribute up to $3,850. Okay. The beautiful thing about this health savings account is it actually gives you triple tax benefits. What does that mean? That means you get to write off when you contribute to a health savings account, the contribution that you make in this case in 2023 or in 2024 up until the tax filing date. Any monies that you contribute to an HSA account is tax deductible. That helps you to lower your tax bill. Okay. It helps to lower the amount of taxes that you pay. But not only that, the monies that you put into your health savings account can actually be invested. And the growth of that account, wherever you put it to grow, the growth of that account, once you invest it, is actually tax free as well. So the capital gains are tax free. But in addition to that, once you actually pull the money out for qualified medical expenses, and when I tell you the list of medical expenses is, it's exhaustive. Okay. If you're buying aspirin, acetaminophen, or ibuprofen, that actually can be a qualified expense that you can pull money out from the HSA account, which then means you don't get taxed on your withdrawals either for qualified medical expenses. So it actually has triple tax benefit. And this is the only one account that does. It's not taxed when it goes in, it's not taxed as it grows, and it's not taxed as you pull the money out. So if you're not contributing to an HSA account, you absolutely must get started doing that now. The only qualifier is you must have a high deductible health care plan in order to contribute to an HSA account. So usually that means healthcare that you may have healthcare plans that you may have gotten through the marketplace, right? Those are usually high deductible plans. You can also be on a high deductible plan as well with your employer as well. So if you have a high deductible healthcare or insurance plan, you actually qualify to be able to open an HSA account, and you can contribute tax-free. You can contribute to your HSA account. You can write off those contributions. As your money grows, you can write those things off. And as you pull that money out for qualified medical expenses, it is also not taxed as well. So it's a great account. All right. The second thing is you can actually invest in an IRA, an individual retirement account. You can, if you are under the age of 50, you can invest up to $6,500 in your account. Okay. If you are over the age of 50, you can actually contribute an additional $1,000. That brings it up to $7,500 if you're over the age of 50. All the money that goes into a retirement, an IRA account, all the money is tax deductible. However, Once you actually reach the age of retirement, we're talking about 59 and a half, once you start withdrawing the money, you do have to pay taxes on your withdrawals. Okay. If you decide not to pull out your money, if you're in a great place and you don't need to pull it out, you must actually start making withdrawals from your individual retirement account once you reach the age of 72. Okay. Once you reach the age of 72. And once you reach the age of 72, you are required to make what's called RMD, required minimum distributions. Okay. So they force you essentially to take a certain amount of money out so they can start getting taxes on those dollars. But if you are contributing, you can contribute to an IRA account all the way up until April 15th, right? $6,500, or if you're over 50, $7,500, and you get to write that off on your 2023 taxes. Okay, let's continue. And if you happen to be someone who is self-employed, the SEP IRA, the Simplified Employee Plan, Individual Retirement Account, is a great account for you to start saving for retirement. If you are self-employed, or if you and your wife work in the same business together, you can actually contribute up to 25%, up to $66,000 of your salary or of your income. All right. And that those contributions would actually be tax deductible. So if you're self-employed and you haven't started just yet, but if you're self-employed, you can open up a SEP IRA account. You can start contributing to this account up to 25% of your income, and that becomes tax deductible for 2023. All right. So you see how I just shared with you the first strategy I shared with you. If there were some things that you didn't do in 2023, all is not lost. You can still do some things to make sure that you start to lower your tax bill for 2023. Okay. So let's continue. Strategy number 2. This might seem like it makes common sense, but let me explain. Strategy number 2, work with a tax planner. Work with a tax planner. The reason why is because there's a difference between tax professionals. You have people who might be tax accountants. You have CPAs, okay, who might specialize in taxes. You have tax planners like myself, and then you have tax preparers, okay? So these are people who prepare your tax returns. But let me tell you, if you're only having a conversation with a tax preparer, right, once tax time comes around, you are missing out. You are missing out. You're actually not tax planning, and tax planning is so important. That is something that should happen at the beginning of the year. I always tell my clients, you must have a tax plan for every dollar you earn and for every dollar you spend. Because if you don't, Uncle Sam is going to take advantage of you, and he's going to take as much as he possibly can in terms of taxes. And if you don't have a plan to counteract that, if you don't have a plan to eliminate or to reduce as much taxes as possible, you'll get taken advantage of. And I don't want to see that happen for you. So working with a tax planner, if you are not a tax pro and you haven't done your tax returns yet, I encourage you, inbox me, email me, or email a tax planner, someone who can prepare your taxes for you. Because if you're not a tax professional, in all likelihood, you are not maximizing your tax refunds. Guys, there are so many changes that happen from year to year. There are so many different tax strategies that are out there. And if you are not somebody who is a tax professional, in all likelihood, you are paying too much taxes. Your tax returns again, in all likelihood, are not maximized. Okay. The next thing is if you are only talking to a tax preparer at the time when it's tax times, when it's time to prepare your tax returns, then you're making a huge, huge mistake because you're not planning, you're not looking at the things that you plan to do for the upcoming year. You're not making sure that you are properly situated and you're properly structured, that you have the right strategies in place in order to eliminate or minimize your taxes, right? And so if you're only talking to someone when it comes tax time, that means basically that whatever's done is done, right? And so I want to encourage you to start talking to a tax planner, someone like me, at the beginning of the year so you can strategize and figure out what needs to happen throughout the year to make sure that you are minimizing or eliminating the amount of taxes that you pay. And also, don't forget that 10% of general sales tax or your income can actually be deductible. Okay, as much as 10% of general sales tax or your income or your salary can be tax deductible. So hey man, if you made $90,000, a tax planner would know, hey listen, there's a little thing you might have missed. We can actually deduct an additional 10% of your income as a deduction. And you want to make sure that the person that you're working with, they know these things, okay? Um, um, Earned income tax credit. You want to make sure that you are getting the maximum amount of earned income tax credit. If there's some things that phases out depending on how much money you make, right? So you want to work with somebody who knows how to kind of move numbers around in such a way that's legal, but still allows you to qualify for the most earned income tax credit. And the government will also pay you or give you a tax credit if you are saving for your retirement. I'm talking over and above the 401k, over and above the IRA, over and above the SEP, over and above the HSA account. If you're actually saving and putting money away for retirement, there's actually a tax credit available called the Savers Tax Credit that you can take advantage of. But again, working with a tax planner, someone who understands these things is really, really critical. Strategy number three. You remember earlier when I said you want to get the biggest return, right? But as time goes by, once you start working with your tax planner, you want to get to the place where you actually stop getting refunds. Why? Why don't I want you to get a refund? The reason being is when you get a tax refund, that simply means that you're giving away too much of your check throughout the year, that you have actually paid too much money throughout the year. Once you file your tax return, then once you figure out how much tax you owe, they give you a refund, right? And so once they give you the refund, you just got your money back, right? That is money that you could be using. You could be using that money to invest in your company's 401k, which again is tax deductible. And so many people will say, man, it's so hard for me to live off the money that I make that I don't make enough to be able to invest in my company's 401k. Well, guess what? If you're not giving away too much money out of each one of your paychecks, that now becomes extra dollars that you can put into your company's 401k. What else can you do? You can reduce high interest debt, or it can keep you from going into high interest debt. If you're not making enough money throughout the year in your paychecks, guess what? Adjusting your W-4 forms and getting more of your money back throughout the year is a great way that you can reduce your high interest debt, or is a way that keeps you from going into debt because now you actually have enough money to live on throughout the year. You can use that extra money to build an emergency fund, or you can take those dollars and save those dollars to save up for other investments to help build your wealth or to help you build financial freedom. So, hey guys, you don't want to get a big refund because when Uncle Sam gives it back to you, it's your hard earned dollars. But guess what? He's just going to give you your money back. He's not going to give you any interest. You're not going to get any gain on that money. That is a lost opportunity for you. So, working with a tax planner is your opportunity to make the necessary adjustments that you need to make so you are not paying too much throughout the year and that you break even with the government. They don't owe you anything come tax time. You don't owe them anything comes tax time. And that's how you want things to work for you. Work with a tax planner to do that. And finally, strategy number 4. Strategy number 4 is what I call income shifting. What am I talking about? I'm talking about diversifying your income sources. It's so important. What do I mean? W-2 earners have fewer tax deductions or tax deduction opportunities because their money comes from a W-2 or comes from a company as a employee. So you don't have as many opportunities to deduct to make tax deductions. So as a result, you wind up paying more in taxes throughout the year. So you want to start income shifting. And what I mean is you want to diversify your sources of income. So you want to start making sure that you get less of your income from W-2 income, and you get more of it from business income, from capital gains, and from real estate income. Why is that? When you have business income, you're actually able to write off things in your business. And the great thing about it is, the cost of goods that you need, manufacturing costs, when you have supplies that you got to source to make items to operate and run your business. So you got manufacturing costs, you got product costs, you got supplies, you got payroll, rents, operating expenses, marketing, salaries, professional services. These are all things that you can write off. There is a ton of business write-offs that you can make. And the great thing about it is when you make money in your business, you're able to write off these business expenses first. And then you pay taxes on what's left. That's the reason why it is so important to have business income. With W-2 income, you actually pay taxes first, and then you get what's left over. With business income, you pay expenses first, and the government gets taxed, right? They get taxes on what's left over. And that's the huge difference. Capital gains. Capital gains, guys, if you make less than, it's somewhere around $44,000. If your adjusted gross income is less than $44,000, and if you had capital gains, meaning money that you made through the sale of stock, monies that you made through the sale of real estate, okay? Anytime you bought and sold an asset and you had capital gains, if your adjusted gross income is less than $44,000, you would pay zero in terms of taxes on those capital gains. That is right. That's the reason why it's important that you become an investor, because when you are investing, if you have expenses, you're able to write down your expenses. You're able to write off your expenses first and pay taxes on what's left. If you are an investor and you're making money, those gains are taxed at 0, 15, or 20%, never higher than 20%. And so If you make $90,000, $100,000, you could be easily paying a marginal tax rate of 24% and higher. So you can see how when you earn income, you actually get taxed more than if you invested or operated a business, you would actually pay less taxes. Okay, so that's the reason why it's so important for you to diversify your income. And then finally, making sure buy some real estate. Okay, buy some real estate and rent that real estate out, whether it be residential or commercial. Reason being, again, you have all these expenses that you have associated with operating that property. You get to write those things off, okay? And you pay taxes on what's left. But the other thing that you get with real estate is you get this beautiful thing called depreciation. And that's when you write down the value, right? The price that you've paid for the property, and you get to write that off throughout the life of that particular asset. And that depreciation expense is a great tax deduction. It's a great tax deduction. And the truth of the matter is, when you write something off for depreciation expense, it's not actually like it was an actual cash expense. It wasn't. It was just an expense that happened on the books. But that depreciation expense helps you write down the amount of taxes, the amount of adjusted gross income you have, and therefore the amount of taxes that you pay. So investing or getting real estate income is truly important. So I always tell my clients, everyone needs a home-based business. So if you happen to be a business owner already, great. But you also need to have a home-based business as well. And the reason being, if you operate a business, not only do you get the business write-offs that I showed you earlier, but you also get a chance to write off spending that you are already going to do in your home if you are operating a home-based business in your home. So now you get a chance to write off things like mortgage, rent, light, gas, water, telephone, computer, internet, insurance, right? You get to write those things off, guys. If you have a vehicle that you operate or use uh, in your business, you get to write off a portion of your business as your of your vehicle. You get to write off a expense, the cost of the vehicle, depending on how much it is, and also how much it weighs. But if you can't expense all of it, you can depreciate the cost of that vehicle over time, which reduces the amount of taxes that you pay. You get to write off either mileage or depreciation, but you can still write off insurance, taxes, gas, maintenance. Okay. These are all things that you get a chance to write off that you are already going to pay anyway. Whether you operate a home based business or not, these are expenses that you're going to pay anyway. Why not set yourself up to be able to take advantage of writing those things off by having a home based business? Very, very important. So maybe you're feeling a little bit overwhelmed right about now. Let me tell you, if you feel that way, I get it. I get it. Let me tell you, taxes they're not easy, and they change from year to year. And it's something that you need to make sure that it's done accurately. You want to make sure that it's done well, because you don't want to trigger an audit. You don't want to do anything that's going to make the IRS look that much closer to what your expenses are and things that you're doing in your tax returns. Okay, you don't want them looking. You don't want them digging. So you want to make sure that everything you do is done legally. You want to make sure that it's done accurately, right? And it's done fairly. So if you're feeling overwhelmed, I definitely get it. If you would like to get the best possible tax results if you would like to have accurate, stress-free service, if you would like to, if you have back tax returns that haven't been filed, no sweat, no problem. Don't worry about it. If you have previous returns that need to be amended or changed because of a mistake or something that you didn't take advantage of, or if you just simply want to be able to reduce or eliminate your taxes in the future, let me and my team at Park Rose Financial prepare your 2023 tax returns, and let us tax plan for you for 2024 and beyond. If you'd like to schedule a consultation, please go to candidly.com/Alex Allure and schedule a consultation with me. I would absolutely love to help you get the most that you possibly can from your tax returns. So there you have it, guys. Those are the 4 strategies, the 4 things that you can do to actually maximize your refund. So if you didn't take, if you didn't take advantage of some of these things, hope it's not lost. You can still make some contributions. There's still some things that you can do, even up until tax time, to actually help you with your taxes. Okay. And as always, please let a tax professional, a tax planner, let me or someone else help you tax plan to make sure that you are fully leveraging, that you're implementing, and that you are eliminating as much taxes as you possibly can. So again, I would love to help you this tax season and beyond. You can go to candidly.com/Alex, ALEX, Allure, or you can inbox me. I'd love to help you guys. All right. So remember, I'm going to be coming to you next Sunday around this same time. I'm going to be sharing with you all the way up until all the way through tax time this year. So join me here next Sunday, 4 o'clock, as I share with you how to take your tax refund and turn it into wealth. All right. Take care. God bless. We'll see you next time.